Was that everything? Is the dump already over for crypto? Well, politically speaking, the situation seems to calm down, although some news indicate an escalation. We will have a quick look at that. Price-wise, we've got a short-term pump in crypto. Also, in the meantime, the stock markets have opened after the weekend and could show us where we might go next. Based on this and some technical analysis, we will try to solve the puzzle together in this video. Let's go. Before we start, let me show you this funny commercial by Coinbase about the halving.
Over time, your money gets you less. Does Bitcoin? Well, in 2012, one Bitcoin bought you this much pizza. In 2016, this much pizza. In 2020, this much pizza. And in 2024, well, you get the gist. Roughly every 4 years, the future supply of Bitcoin is reduced. So historically, you get more, not less.
By the way, if you haven't subscribed yet to this channel, please ask yourself why and do it now. In my emergency update video yesterday, I told you about the drone attack of Iran and the implications on the crypto market, that this is a first time ever event in recent history and something that could spark a lot of bad things happening. In the meantime, we saw things calm down a little, accompanied by many crypto projects pumping, also meme coins pumping 50-60%, after the harsh sell-off that hit altcoins a lot harder than Bitcoin. More information about that in my last video. The thing is, we've heard a lot of things, also the US government trying to stop Israel from hitting back, and also them saying they won't accompany Israel in doing that, which most likely was one of the reasons the market had a little breather, but as it seems, things can change pretty quickly. Israeli media, as you can see here, now says the war cabinet said to favor hitting back at Iran, but divided over when and how. This was at the time of recording this video a couple of hours ago and means uncertainty, and markets, especially risk on assets, don't like uncertainty. And now, even more recently, the war cabinet decides to hit Iran back hard, hopes it won't spark regional war. Well, let's hope this won't spark a world war. The thing is, these things happen on a weekend, so this impacted crypto right away, but the stock markets were closed. Today on Monday, the stock market is now open 4 hours ago at the time of recording. And as there was no trading on the weekends and the pre-market traded positive, we've got a so-called gap up, meaning the price started at a higher price than it closed before the weekend. You can see this over and over here again. Every weekend or most of the weekends, we've got some kind of gap. If the price opens higher, this is a gap up. And if the price opens lower, as you can see here, for example, this is a gap down. Statistically, these kind of gaps tend to close. This means the price reverses back into them. By the way, this is something I told my Telegram members right as the market opened. So I encourage you to join now. The link is down below. There's more alpha. One of my trading indicators will be for free alongside a mini course. There's basically only benefits if you don't join. I can help you. Back to the charts. Within 2-3 hours, the gap was closed, and since then we've even went below it. The bias was already bearish, as we've been below this moving average for quite some time now at the end of last week, and this is something that held for the whole uptrend we've seen in the last months. If we got a retest to this moving average, then we recovered swiftly and vertically. And even in the uptrend of beginning to mid of last year, we've used this moving average as retest. If we went below, this was just for a short amount of time before we swiftly rebounded. And in this case here, we can see it in August 2023, we went below it, closed multiple times below it, had a chop, multiple rejections, and this just meant that we will go down lower. And what we have now looks pretty similar. So just by looking at the charts, this doesn't look specifically bullish. And with this bad news, it doesn't make it any better, especially because of the uncertainty component. So where could the S&P 500 go in the short term? Well, this will be this lower moving average, similar as we had it here. If we reach it, we have to re-elaborate the situation and see if we could even go below it. But this is too early to tell. As I told you in my emergency update, if the stock market opens and it goes down, this will drag crypto with it further and will be more downside than what we've seen on the weekend. And technically, if we have a look at Bitcoin right now, this is a textbook bearish scenario. This moving average is holding since the mid of October 2023. 3, the golden one. We went below it just one time after the Bitcoin spot ETF was released. We had several bullish retests after the new all-time highs here, here, and now we're trading below it. But as you can see, with a lot more momentum than compared to this here. Here we went below it, we creeped along, we went a little down, a little further. This is kind of fine. But at the very moment, this is a harsh breakdown, a mean reversion, and now it goes down along the stock market. Percentage-wise, it's actually not too bad. It's just around 16-17%. But the structure does look bad and makes it more likely for downwards continuation. Now, what's the first target for Bitcoin? Well, this would be this gold moving average, but on the 1-day time frame. So now we're still in the 4-hour time frame, but now this gold moving average is calculated based on the daily time frame. And currently it's sitting at more or less perfectly $50,000, which also coincides with this support and resistance zone. And it's also the 0.618 of this upwards move. And as another confluence, it's exactly the area of the lower band of the Phil Prince reversal bands, which due to this uptrend established a big distance from price. And time again gives us the local bottoms of bull market crashes, as you can see here. Now, in that bearish case, altcoins will go down even lower. For example, Render here in the last couple of days had minus 40%, then pumped 42%, and now we're going down. Here we were perfectly rejected at the blue moving average and nearly were at the golden moving average through a week already. Now, please don't panic sell. I know your portfolio will go down and it will hurt, but this is still a bull market. The volatility of altcoins is crazy. That's something you have to get used to. And this will be a time to scoop up altcoins, not sell them. Even if it means that we will enter a small bear phase, not a bear market. And how long could this take? Well, let's say 2-3 months over the summer basically, but this is just if we violently go down from now on. So again, I encourage you, please don't panic sell. Use the time to educate yourself. Use the time to scoop up cheap altcoins. Just my 2 cents, not financial advice. Now let's have a look at another altcoin, SAI. This already is here at the gold moving average, went down a lot. And the next target would be here at around 29 cents. This would also fit this ABC correction, which I'm looking at for some time now. So this would mean lots and lots of opportunities to enter the market. In 1 or 2 videos some weeks ago, I already said the state of the market with all of these meme coins popping up and doing crazy returns within a couple of hours. This is basically always a sign that market is overheated and will see some kind of correction. Another indicator that supported this was the USDT dominance. And the dominance had this bottom forming here, and the breakout to the upside means basically that market will go down. Because if there is more stable coins, and the biggest stable coin to be used in crypto is USDT, this means there will be less money in Bitcoin and other altcoins. So don't worry, it's just a correction. It's quite normal. We will closely monitor what markets are doing. Also keep looking at the political and macroeconomical factors. So make sure to subscribe to this channel now so you don't miss out on any of my next videos and stay ahead of the crowd. Also, don't forget the halving is just around the corner in 4 days and 9 hours at the moment. It pretty much doesn't matter in the short term, but long term, you know what happens. If you'd like to know my opinion about this long-term scenario, have a look at this video. I hope you gain massive value. Of course, this was not financial advice. Always do your own research and due diligence. This was Phil Prince for you. Until next time, crush the markets and goodbye.